Great to be back with you once again on the second leg of the India development debate. I'm Supriya, Shrinate, and with me Sandeep, Gurumurthi. We continue to discuss the free fall of the rupee, but it's time to put the spotlight on the politics of this free fall. Syed Zafar Islam represents the BJP here, Sanjay Jha represents the Congress party, and R. Jagannathan is editorial director for Rajya magazine, who also joins us on this leg of the debate. Thanks each one of you for being with us on this special debate. Syed Zafar Islam, it's only fair that I begin with you. Modi ji finally managed to do something that the Congress party could not in 70 years. And no, I'm not saying that. That's exactly what the Congress party says while it is staring into the government, putting out videos of your former ministers, of the Prime Minister as the Gujarat Chief Minister. Because when the rupee hit an all-time low, they could go back and take out a lot in history. And they also say that the Modi government should be blamed for the rupee to breach the 70 to $1 mark.
I think, Supriya, if anybody hold responsible for the government of the day, or for that the state of the economy responsible for rupee getting to 70, level of 70, is I think it's somebody who does not understand the economy at all. Because the state of economy is something which everyone knows. It's after the structural reform which has been undertaken by our government, the economy is doing exceptionally well. It is the brightest spot in the world. But what is the more important, that you have to see around the world what is happening. And there is something which has triggered in Turkey, in one of the country which is part of the emerging economies, and their currency which has depreciated substantially. Substantially means in last 1 week 25%, and if last 4 years, if you see 90% has depreciated what it was 4 years ago. And if you contrast, if you see Indian currency, which is also a part of the emerging economy, Indian currency have already depreciated 14% in last 4 years. Secondly, what is more important, that if you just compare the global economy and particularly the emerging economies and their currencies, India is definitely has done exceedingly well compared to many other currencies, like for instance Brazilian currency, like for instance Mexican currency, like for instance if you see the South African currencies, for that matter many other countries. Even if you just compare with the best on the street is Malaysian ringgit and the CNH, they have also depreciated last 4 years. Around 8 to 9 to 10%, and India has depreciated 14%. But what is important, that the one thing which you have to understand was the crisis in Turkey, and secondly.
Okay, I hear your point, Syed Zafar Islam.
Can you hear me?
Saying that it's all because of the crisis in Turkey. While it is a trigger for this, yes, we can hear you, Syed Zafar Islam. Allow us to interrupt you. I hear your point on the fact that this is led by the crisis in Turkey. We have nothing to do with it. I take that point on board, but it's not as if we are an oasis of stability. You know, there are macroeconomic, vulnerabilities that are now increasingly visible. We'll debate that. But Sanjay Jha, let me come to you. I want you to respond to the comments made by Syed Zafar Islam in response to the tweet put out by the Congress party. And may I add to it by asking that, do we need to remind you who was in power when, after, the Fed chief uttered the word taper tantrum, the Indian currency nosedived. Then it was convenient for the UPA to blame global factors, and now it's the same global factors that have led to this meltdown. Why are you politicizing this fall that is largely on account of global factors?
There is a very famous maxim, what is sauce for the goose is sauce for the gander. Now, we have put out Narendra Modi's comments on the currency crisis at that point of time. You rightly said, on account of the Fed rate hike, the quantitative easing issue. Now, that led to a crisis in all emerging market economies. And I remember arguing then on television and being told by Mr. Arun Jaitley and gang that, global factors, that's just a flimsy pretext being made by the BJP. Now, suddenly, 4.5 years later, it's all global factors. Now, you can't have double standards. Let's have the same yardstick of measurement. Now, let me tell you why the Congress party today, I think, is actually making a very pertinent and a relevant issue of why the BJP is responsible and not global factors as much. I agree with you, Sandeep. It's a trigger. It's a partial marginal impact. but actually the prime responsibility is of the mismanagement of the economy by Mr. Modi's government. Look at the current account deficit of India. The current account deficit of India, by the way, is today at a 5-year high. Now, the BJP counter of mine kept saying that, the rupee depreciated 14% in 4 years, very cleverly obfuscating the reality that the rupee is the worst performing Asian currency in the last, in this year. It's actually depreciated by close to 9%. He's not telling you that. The other point that we need to factor in here, that if you look at exports, now, the truth is that the tariff war which is happening today wasn't happening earlier, but look at the last 4.5 years. Exports have been absolutely stagnant, they have diminished. It is at its 14-year low of being only 14% of India's GDP. Now, these are manifestations of an economy that has not actually ever been buoyant despite a very fictitious GDP they have created. Manufacturing is therefore low, jobs haven't happened, and now because of the fact that the oil bonanza is over, that tailwind is gone, the economy is virtually now collapsing. Because what is going to happen, and this is Peter Brand's comment, Peter Brand, who I think everybody recognizes as a fairly active currency market player, he says that if the rupee crosses 71, it could reach 86. So you are 80. So you're talking about a fairly daunting economic pressure in India.
Okay. No, 1 second. Sanjay, just hold that thought of yours. And Zafar,
can I just rebut, please?
I'll come back to you for your... No, I will come back to you for your response. No, not right now. I will go to Jaggi and then I'll come back to you, Zafar Islam, and you can take both those points together. Jaggi, is it fair to blame the government for this currency crisis? Or is this perhaps just a simple case of the Congress party returning the BJP's favor in perhaps equal measure, if not more?
I think we should leave all politicians out of any economic analysis, and I think neither was the BJP right when it over-criticized the UPA some years back, nor is the Congress right do that. In fact, I would say on balance that the Congress is less right today than what the BJP was, let's say, in 2000 earlier, when before 2014. The facts are very simple. Between the last 4 years of UPA, the rupee depreciated 32%. In the last 4 years, the rupee has depreciated about 15–16%. So this itself shows you that the magnitude of adjustment that has happened is far lower in the last 4 years than in the previous 4 years, the last 4 years of the UPA. So, and the second point I would like to say is that it is on an average historically the rupee has depreciated against the dollar about anything from 3 to 5% annually. It does not happen it does not happen every consistent year. For long periods it remains stable and then suddenly it corrects. Now this year happens to be the year of correction because global factors have precipitated it. So the correction that need to have happened every year over the last 4 years is suddenly happening this year over the last 12 months, and that's what we are seeing. And how much is this government responsible? I would say it's only the politics of the current 1 year when we are all into election mode that is worrying the market. So in that sense, this is the domestic factor that is at play. By and large, otherwise it's the international factors at play and the long-term adjustment of the rupee that needs to adjust to inflation differentials between our real effective exchange rate was far too high and our exchange rate was uneconomic for exports. I think this is the correction that's happened.
Okay, that's an important point you're making. You're saying it's largely on account of global factors. Let's not play politics with it. I take that point. But Zafar Islam, I'm going to let you respond to what Sanjay just said, and I'm going to add a question. In 2013, you said that, we should not politicize this matter. In 2013, Sushma Swaraj, who was the leader of the opposition in the Lok Sabha and who's currently the External Affairs Minister, said, and I quote, "The rupee has lost its value and the Prime Minister has lost his grace." Even Mr. Modi was scathing in his criticism of the UPA when the rupee weakened in 2013. So how can you today blame the Congress party for politicizing the issue?
Well, in 2013, there was absolutely no crisis. There was a economic crisis in 2008. That time, if you see the equity market had plunged and it came down to 6,000 level of 6,000 today, it is 38,000. on the same parameter, I am saying that if there is a crisis, then that kind of fall you witness, and that you had witnessed in 2008 during economic crisis. During UPA time, we didn't blame UPA because that was something which had to happen. Likewise, if there is something happening in global market, and it is because of that, it is impacting the local currency as well, because all the other currencies, it's not India, it's not in isolation, it is happening. It is Lira which has depreciated 25% in 1 week. Secondly, what is more important, Mr. Sanjay Jha, if you can recollect, that in 2013, if you are talking about the macroeconomic parameters, economy is in bad shape, I think you should go back and read something, because the current account deficit was over 4%. Today it is around 2%. The fiscal deficit was in 6th handle. Today it is in 3 handle. All the macroeconomic parameters, if you compare in 2013, because it was very poorly managed economy during UPA 2, and today is absolutely in good shape and in good state. That's why the world is acknowledging that Indian economy is poised to grow only. Let me tell you, what you have not done in what you have done in last 70 years,
about the good
we will be able to do in
next
these 4 years, another 5 years.
Zafar,
the kind of the economy.
Zafar.
Sorry.
Okay.
Yeah.
No. Let me just come in for a minute. I'm not
Supriya,
certain about the fisc. I may be certain about the CAD and all of that. Okay. Anyways, let me just get Jaggi to react to the point that you're making. And the whole broad comparison that the BJP is really doing on this entire rupee issue is comparing it to 2013. Is it fair to make the comparison of the two situations? We were staring at a macroeconomic crisis then with a ballooning current account deficit and a fiscal deficit. Are our fundamentals so strong? Is it so different now? Is it fair to make that comparison at all? Jaggi?
No, I think our fundamentals today are certainly far stronger than they were in the last 4 years of the UPA for a very simple reason. I think in the last 4 years of the UPA, the fiscal situation was rapidly deteriorating, and it started stabilizing only after 2013 when oil prices were being raised gradually. And the inflation was in double digits for most of the second half of the UPA, and it only started stabilizing towards the last year or so. And so I think, we don't have to say about every other thing where infrastructure was crawling to a halt. You could see many other, government was clamping down on important development expenditure in order to meet the fiscal deficit thing. So economy was in slowdown mode in the last few years, except for the self-inflicted wound of, say, demonetization. The economy has largely been stabilized, the fiscal stabilization has been good, inflation has been largely under control. So I would say the macroeconomics have been fairly sound, except for that blip in the few quarters after demonetization. So there is no comparison between the last 4 years of the UPA and the first 4 years of the NDA. So I think they're definitely macroeconomically, so of course we have vulnerabilities. If oil rises to $80 or $100, again you have a problem. Those factors remain. And if you have agrarian crisis, if the MSP increases lead to a revival of inflation, again you do have a problem. There are slight vulnerabilities, but nothing unmanageable as of now.
Okay, that's a good point you're making. You're saying there are slight vulnerabilities, but you can't compare the current situation with the precarious macroeconomic situation in 2013. But, you know, Sanjay Jha, while I take your point on the fact that you can't have hypocrisy when it comes to the, attaching the importance of the value of rupee, and so I take that criticism of the Congress party of the BJP. But let's look at facts. The reality is that the rupee has actually strengthened by 20% in the last 4 years in terms of the real effective exchange rate, or the REER. We've lost 6% value this year, but yet, even if you factor that, or 6.5%, the rupee is still strengthened considerably in the last 4 years. So, and I'm going to question if, are you going to, judge a government's economic performance by seeing what has happened to the rupee? That itself is dubious. But even if you were to do that, are you then going to give the government credit for this strengthening that we've seen in the currency over the last 4.5 years? The fact that it's actually strengthened 20% and shed some value, but has shed, it has strengthened by 20%. That's significant. Will you give credit to Mr. Modi and the BJP government for that then?
Well, the reason why we have actually called Mr. Modi on today because he made the statement as the Gujarat chief minister, you know, with all this 56-inch bravado, as if the currency, the health of the Indian currency was a manifestation of the governance of the country. Well, in that case, Mr. Modi, you have failed to govern, and maybe it's time for you to say goodbye. Hopefully tomorrow will be his last speech from Red Fort. But I think the larger issue here is, if you look at the macro variables, whether it's jobs, private capital investment, gross fixed capital formation, farmer issues, rising inflation threat now coming up, diminishing exports. I mean, these are all telling signs of a very failed economy. Now, let me tell you, I don't know where Mr. Jagannathan gets his optimism from, but today, if the rupee crosses 70, and nobody can predict where it can go, and if oil is going to be rising at the same time, which is predicted to rise, India is headed for a double whammy. If you have a rising oil price and a weakening rupee, it means your cost of imports are going to be humongous. Obviously, it is going to impact inflation, which means a higher interest rates, and which means there is absolutely no question of the economy taking off, because it's already been fairly flat and plateaued. So I really don't know why his sanguine expectations are, you know, telling him to be very bullish, but that's his view. But the larger point that we should never forget when we do this whataboutery, and that is the truth that I don't think the BJP will ever tell the viewers, but I will tell the viewers on ET now, that don't forget, no, 1 minute, let me make this point. In 2013, you were still recovering,
wait for a minute.
You were still recovering as an economy from a global backlash of the worst recession India, I think the world had faced in India was one of the countries that had recovered.
That point has been made.
Second, we were facing oil prices at $140 a barrel. No, 1 minute. UPA handled $140 a barrel. They handled $25 a barrel. What a difference.
Sanjay, I agree with you. That point has been made earlier. Yes, Sanjay, I agree with you. That point has been made earlier, which is why the comparison, I believe, cannot be done. These are not apples that you're comparing to apples. These are apples that you're comparing to oranges, because the oil was at 140. You've been lucky to have oil at a $40 a barrel in your regime. But Zafar Islam, I have a larger question to ask of politicians across the spectrum, whether it's the BJP or the Congress. Why is the value of the rupee a matter of national pride? And it's not just you. Politicians in the past have also made the same mistake. It is the BJP that made it an issue of national pride as it tried to fan economic nationalism. But should policymakers really obsess about the value of the currency, or focus instead on competitiveness like China did? And the larger point is, you started it off. You said when Mr. Modi comes to power, the rupee will go to being 40 to $1. You needn't have. That's not economic nationalism. It doesn't work like that. Zafar.
See, you have, let me respond to that.
No, wait, Sanjay.
You have to see everything in the right perspective. That time, you have to see the intrinsic value of the rupee and where it should settle down. And that time we felt that the intrinsic value, even today I am saying that it is because of the crisis globally, the rupee has slipped to 70 level of 70. But I am sure that once everything gets stabilized, it will come back for two reasons. First, that the stability, what is the volatility today in the global market is impacting, and the rupee has depreciated. Because once the stability is there, the rupee will keep appreciating. And secondly, India, you have to see, given the corporate performances, you see a lot of FDI is expected into India.
Not good, Zafar. That's what I'm saying.
Putting money, the debt, just see the number, June, July, August number. Globally, India is the best country which is attracting both FDI and FII flows. Also, even if you see the kind of carry debt investors have in the country, even after the depreciation, I'm saying adjust for the depreciation, still you are making 4% compared to what they would be making in China. So there are a lot of interest in the country for investment, and some of them had huge carry they have sold also. To that extent it has impacted. But let me tell you, whatever the observation made by Mr. Sanjay Jha of Congress party, if you adjust everything and put it in number, then the current account deficit, whatever he has spoken, it will around be 70 billion from 50 billion today to 70 billion, which is like 2.5% of GDP. They had 4.5% of GDP and today 2.5%, and they are saying economy is in bad shape.
It's not 2.5%. Okay, I take that point.
Learn the basic before making this kind of statement.
I take that point. So Okay, I take that point. Zafar Islam. I don't have much time on the show. Jaggi, I'm going to let you have the last word. But before that, a quick question to Sanjay Jha. Running out of time, Sanjay Jha. Since you spoke about waterboarding, let's look at facts. Dr. Ajit Ranade, a very eminent economist, says this fall may be good, and so does Anand Mahindra, who's an industry stalwart, who says this could be the Make in India movement. So, in some sense, is this fall as bad as it is being made out to be? I mean, why do we make it कि rupee 70 पे आ गया तो मतलब as if the whole nation is collapsed? Market determines this level, and there are fundamentals of the economy that we need to look at. Sanjay.
Well, let me answer that very quickly, Sandeep. Everybody knows that a depreciating rupee is going to be extremely good for exporters. So, primarily for exporters, it becomes a definite advantage. But please recognize there is a big macro risk here, because Turkey does not have enough foreign exchange reserves to boost Lira, which means if Lira goes on a free fall, you are going to have a huge contagion impact on other currencies. And because the dollar is getting stronger, you will have a bigger flight of capital leaving countries like India, where nobody will like to take a risk on a stock market, for example. They will liquidate their holding and run back. So you have a potential crisis. Now, I have a lot of respect for Anand Mahindra, etc., because they are making the right sounds, but their macro risk at the moment is humongous. I don't think we should try and undermine that.
Okay. No, I'm talking about the macro risk. I'll let Jaggi have the last word on the show. And Jaggi, politics aside, the fact is that we have a fiscal deficit which isn't quite under control. We can keep talking about macros being stable. Fiscal deficit is looking risky. It's on shaky ground. A widening current account deficit, again, isn't great news. Our depleting forex reserves, at the peak, we were at a $427 billion. That dipped to 402. A weak rupee and a rate tightening cycle underway. Suddenly, the macroeconomic fundamentals that were appearing so strong actually seem to be throwing up fault lines just ahead of elections 2019. Jaggi.
Yeah, I mean, I certainly think that there are macro vulnerabilities developing, and we have to watch them very closely. But at this point, I don't think we have reached any kind of major crisis situation. And a rupee that stays somewhere between 68 and 72 is probably the right level, though the Reserve Bank has no business trying to defend it. It should defend against short-term volatility. It should not defend any particular level of the rupee. And if the rupee depreciates further, we should adjust oil prices domestically. But to the extent that the export engine starts firing again, it's a good thing, because among the four engines that I think, exports are the one thing that have never fired. And if this fall is going to stimulate the export thing, it is a good thing. And we only need to watch the current account deficit. We should not watch the rupee too closely. 68 to 72 is a good enough range that adjusts for all the real exchange appreciation. And I think we need to watch, but we don't need to be overly panicky at this point of time. The globe is what it is, and we have to watch. We have to make sure that we have to keep the powder dry. We should not be spending too much on defending the rupee at a false level. If it needs to fall, let it fall for a while. Only thing is, you need to make sure that the oil prices have to be controlled and not controlled. I mean, it need to adjust according to global prices.
Market reality. Okay. I take that point. Completely timed out. Rupee at 68 to 72 is the level we probably have to learn to live with. It's a cause for some concern, but no room for panic. Is the view of our experts, and Jaggi agrees. Let's leave the politics aside. The BJP played it when it was in opposition, and now the Congress is doing the same.
Indeed, and I just think political bravado doesn't need to creep into currency, but that's another debate altogether. Thanks very much for being with us on this edition of the India Development Debate. We hand it over to Dr. Nitin.